I've had at least 4 conversations in the last week about estate tax returns and whether or not people should file them. They don't want to spend the money on them. Is it really necessary? And the long and the short is it's not necessary. 100% not necessary at all. The estate tax return, for most people, isn't necessary because you don't have a taxable estate. The exemption amount in 2023 is $12.92 million per person. So for a married couple, it's close to $26 million. Now, why would you want to spend money on an estate tax return? Well, let me tell you. You would want to if there's a possibility that the assets that you have are going to increase in value, or in the event that the estate tax exemption amount is going to go down in the future. I've had many clients that did not file an estate tax return for a deceased spouse. And when you don't do that, you lose their exemption amount. So for somebody, if their spouse was to pass away in 2023 and they don't file an estate tax return within the deadline times for doing so, they lose that $12.92 million in exemption. And they can't reclaim it if they don't file an estate tax return pursuant to the guidelines. Now, there's case law out there that says you could potentially do it out up to 4 years after the person dies, but don't wait that long. Make sure that it's part of what you're doing in administering somebody's probate or their estate or their trust. There's just huge value to being able to do that, because if there is a windfall, if there's a huge sale of a family business, appreciation of real estate happens all the time. Farmers who have property that's worth a couple $100,000 becomes worth millions of dollars. And we see that in Texas everywhere, all up and down I-35 and the other thoroughfares. Real estate is becoming very expensive. And unless you plan for this stuff, your loved ones could end up paying that 40% tax on the exemption amount, or beyond the exemption amount. So if you've got a $20 million estate in 2023, you're going to have 40% tax to pay on about $7 million. And that's a lot of money. But if you were to preserve exemption amount and take that unused amount from the deceased spouse and save it for the future, so you would have $13 million of exemption to use at the death of the second spouse. So it's a huge thing to do. Some people don't want to go through this process because they don't want to open a probate, but sometimes it's just highly recommended that we do this for the tax savings potential, because the last thing that most people want is their loved ones paying 40% tax on income. So if you have questions about estate taxes, or if you have questions about an estate tax return, talk to your estate planning attorney, talk to your tax attorney, talk to your CPA who deals in these kinds of things, because a lot of people don't live in that space. And you need to make sure that you're working with a professional that understands estate tax and sees the value in filing that unused exemption amount return. It's called a dessous return. But I can't recommend it enough. It should be part of your conversation. Be looking forward to all opportunities to help preserve the legacy that you and your family have built and to leave it to the next generation.